So in this video, I'm gonna be reviewing the market on Friday. We can see this is our Thursday's first presented fair value gap, and this is the one on Friday, first presented fair value gap. Firstly, market opened at 9:30 a.m. Created this fair value gap. This is not our first presented one, but I am watching this gap as well. In this today's in the Friday's market, the market showed high resistance. It's not seek and destroy. Again, if you're stupid, you think this is seek and destroy, I can't help you, but this is high resistance, high liquidity resistance conditions. Okay, and whenever there is a high resistance liquidity conditions, market tend to go eventually to the target, but comes back sometimes or takes time to do that. Again, in my personal opinion, what we should do is watch the 9:30 fair value gap and the one after that. So this fair value gap and this one. So if I see what's happening here, market opened, try to trade back to the 50% level of the opening gap, and then went up. Now, people, when this happens, people might think it just tapped in, it might want to go, but no. Um, I want to wait till macro starts and see what happens. So macro is when 9:50 here. So I can see that market went up and went going down again. Now I have some rules to trade this, and if I see that we have some now everything in normal case shows that this is wants to go down, right? Because there's the buy side liquidity that was taken by this wick. Okay, and we can think of that this is low high lower low higher high, and then this breaker tells us that it wants to go up, right? Now in this condition here, we want to watch the first presented fair value gap, right? So the way it's wicking as well, it just tells I want to really go down, but that's not the case. Why? Because I watched what happens to this fair value gap when market, if I remove this for a second, see that. Now if you don't know that there's a gap, it went down, it taps in, you're like, okay, let's want to go really down, and you make a sell trade here. But no, because I saw that it was failing to go to the 50% level, and it took this recent sell side liquidity from 7 o'clock to 11 o'clock, I would notice where my sell side and buy side is. So this is my sell side, that was my buy side. Yes, it took the buy side, and that's why it came below. And this is high resistance now. It wants to go up, but it took minor liquidity, tapped into the first presented fair value gap of Thursday, and it came down. So something tells me that this is where it doesn't want to go further down. This is the max, and I see that, and I wait till it trade back. As soon as it does that, now I can enter trade on buy, and I can put my first presented fair value, the 9:30 fair value gap back again. It trades above, and then I can just enter at this level. So let's say if I enter here, this is the 950 macro, or I wait till it shows it want to go above the fair value gap and enter here, and my stop loss is below this fair value gap low, and my target would be the latest level of the liquidity or the midpoint of the constant encroachment of the fair value gap, which is somewhere here. So you can see that works out, but I wouldn't take a trade because that's not risk to reward I'm looking for. You may want to take the stop loss to the just below the opening or the constant encroachment. But again, if I put the constant encroachment, I'm not taking this trade unless it's greater than 2. So I wait to see what happens, and it comes down, trades back into this fairway gap, and this time respects the bodies respected this fairway gap. And as soon as that happens, this time I'm watching if I can get another fairway gap to trade on. When it went above and traded here, it created this fairway gap, and maybe we can enter on this if it gives us the opportunity. If it runs below uh, alone and leaves us without getting filled, like if we don't know if it actually can come here and give us the fill. So unless this happens, I have to look for a trade somewhere when it comes just like here. So either I can place the trade here and target what? The last liquidity level here, or the midpoint again. It could leave some relative equal highs and lows and midpoint. So we can see that is also a good, and the low would be this. So again, if I wanna enter here, my stop loss cannot be this high. I have to put something just maybe at the entry or something. Yes, or if I could enter here, I can keep the stop loss here because I'm entering on this fairway gap, right? I don't want to see it come below all the way here. So that's a good entry. And that's where our take profit is gonna smash. And again, what time was that? 9:50, sorry, 10:50 to 11 macro. We 11:10 we entered on 11:05. We went up, smashed the take profit, or we could have taken this as another target point. It just took that liquidity level, tapped the high of this, and went back. But this is a good point to take a target. Alrighty, that's it for this trade review. Think it makes sense why we have to go long whenever there's a high resistance condition, high resistance liquidity conditions. Always don't be stupid to think it's seek and destroy. First note down if there was a fairway gap offered on 9:30 opening. So it was. So this is not high resistance liquidity conditions. I've been mentioning it in chats of some streamers, and they're just so stupid to like get annoyed and not believe this is not seek and destroy unless ICT mentioned in the video that it was, and then everybody started believing. But nobody believed me because I'm not a big streamer. I don't stream. I don't ask you for money or sell courses, right? All right. Sometimes you don't have the best communication skills, and you just are you're best at what you're good at, right? I'm good at trading, so I'm telling you this is high resistance conditions. See that? Tapped right there. It was supposed to go there. And it started respecting, right? So the bodies. So this was a perfect trade. Wait till you enter, okay? And yes, uh, again, this offered 75 handles, which was supposedly going to go to 50%, but that's okay. If it doesn't go, you entered right here, it doesn't go, you get stopped out, or you took a partial at the 75% level or somewhere here, and you saw that you just got stopped out at the break even here, and then you see it's going up, then wait, you have a bias, shift in bias, okay? You have to shift the bias from becoming not bearish to the bullish level, okay? Cool. Yeah, and we have some sell opportunities here. Turtle soup, pretty much going down back into this area, or maybe even this one, but not that great. I would say this was good entry. Anyway, a lot of talking. I've said enough, and I'll see you in the next one.